Well, turning back to the market, of course, as we await the opening bell, it's a busy time of the year, and December starts with a batch of jobs data throughout the week that should give us a better sense as to how the economy is faring. For more, I want to bring in Malek. He's a Chief Investment Officer at Siebert. Mark, welcome.
Thank you. It's great to be here.
It's great to have you on the show today. And after those strong gains that we saw for stocks in November, the best monthly performance this year, fueled in large part by that post-election rally. How are we set up as we start December?
Yeah, well, it was an impressive month. And this week is sort of what I would call naughty or nice week. Because this week we have a raft of employment numbers, and as we know, going into the final FOMC meeting of the year, the Fed is very focused on those numbers. So the numbers we get this week could determine what the Fed does in a couple of weeks, and that can determine whether or not we're going to get a so-called Santa Claus rally through the end of the year.
We always get that all-important jobs report, the monthly jobs report, on the first Friday of every month. Yep. So this will be the November jobs report that comes out on Friday. What are you expecting this jobs data to show?
So I think we're expecting the unemployment rate to remain the same, but I think what we're looking forward to is earlier in the week the JOLTS number. So we get to see job openings. That's a number that's not highly covered by a lot of us, but the Fed watches it very, very closely. We want to see if that ticks up or ticks down, or if it continues its downward trend, indicating an easing of the employment, the labor market, which is something that the Fed would like to see. And then, of course, we have the ADP number, and then we have the weekly unemployment claims, first-time claims, and all of those will lead up to the Friday, the grand ending of the week.
Yeah. So between the jobs report this week, a Fed decision midweek, and of course the usual Santa Claus rally that we get at the end of the year, how do you anticipate the jobs and the inflation data that we got last week, even during that holiday shortened trading week, will inform the Fed at its final decision of this year?
Yeah, well, we had a slight tick up in inflation last week, but it was expected. But it's something that we do have to watch because the Fed has been pulling back a little bit on its dovishness. But turning the coin to the other side, the Fed is also part of its dual mandate focusing on the labor market. And right now it's sort of a toss-up. At this point, we're kind of like in this neutral state. We're expecting, a 25 basis point cut later this month, and possibly another 50 basis points next year. That's sort of the baseline that everyone's working on. But those numbers are definitely going to inform the Fed either way, and I think employment is going to be their focus right now.
It's interesting because the consumer does still seem very willing to spend, right? Very strong Black Friday. In fact, record online sales, almost $11 billion, and the data showing that Cyber Monday today is expected to be the busiest shopping day of the year. How is consumer spending fueling this economy?
Yeah. Consumption is really the driver of the economy, right? So 2/3 of GDP comes from consumers, and we've seen very strong consumer numbers. I mean, consumers have been holding up the market. The key is going to be to watch if that strong consumption continues to push inflation higher. So far, goods inflation has not been a problem. It's been mainly services inflation. But this is sort of a perfect scenario where you see strong consumption, we see a pretty healthy labor market, and we see what we hope is going to be declining inflation or continued disinflation.
I want to talk about some of the cabinet picks that we've heard from President-elect Donald Trump. Notably, we started last week with a rip in the stock market, and that was on the back of his announcement. The incoming Treasury Secretary of his pick is a hedge fund manager who, of course, Wall Street thought would be favorable to Wall Street. Do you think that does bode well for markets in the new year?
It certainly does. We would like to hope that. We know President-elect Trump is very focused on the markets, and that's a good thing. But we would hope that he would have counsel from folks that are sort of Wall Street people like ourselves that can sort of give him good counsel. And of course, it's one thing to talk about potential policies. It's another thing to do policies and see what the impact might be on the market. And we think his pick for a Treasury Secretary is the right one. So, I mean, we feel that it's going to help him make a more measured approach to tariffs and so on. And I think it's going to be a very good thing for the market.
What is the counsel that you would give the president-elect when it comes to policies like tariffs?
Yeah, I mean, I think I share, tariffs may be necessary. They may be a necessary very evil to sort of get things to start working. But I think the measured approach is what Wall Street is hoping that the president will do.
And a measured approach might mean layering, no tariffs at all. What exactly does that mean?
Possibly layering and other things. Are there other ways to bring companies onshore that you could try first, like tax incentives, et cetera? Threatening tariffs is one thing, and putting them in place is another thing. Market likes to know what's going on, and so when we hear tariffs may come, and then they may go 2 weeks later. So we would hope that the layering approach would make sense. I mean, in reality, there are a lot of tariffs in place right now today, and the market is doing just fine, and the market is factoring those in. So if we do it slow, it gives the market a chance to sort of digest that and understand what the implications might be.
I read a stat, and we've been covering it here on the show. According to that global data firm that I referenced earlier, more than $140 billion went into U.S. stocks during the 4-week period during November, a record for a 4-week period of time. How does that alone, money coming into the market, set stocks up into 2025?
It does. It's a good thing, right? So I think sentiment is high. I think a lot of people are expecting a stimulative economy going forward. I mean, Trump's election and the red wave certainly gives him a better chance of putting those stimulative things in play. So I think it doesn't surprise me that we see record numbers coming into stocks going to the end of the year. Everyone's hoping for that Santa Claus rally.
Mark Malek, Chief Investment Officer at Siebert. Mark, thank you so much for starting the week with us and the month of December.
Thank you.
It's great to have you.